Welcome to AS Gold, your daily XAU/USD outlook for July 13th, 2026. Today, ceasefire dead, Hormuz closed, and CPI week begins. Bias, neutral bullish. Here's where gold stands. Spot sits at 4,100 to 4,113, down 1.5% on the week, stabilizing after a week of selling. The FOMC plot flipped to a hike, with the median end 2026 rate now 3.8%. And the Strait of Hormuz is declared closed by the IRGC after they struck the GFS Galaxy tanker. The week low hit 4,074.70 on July 8th. RSI is below 50, showing a lack of buyer conviction. Near-term bias remains neutral bullish. The big picture. Gold opens Monday near 4,100 to 4,113, down about 1.5% on the week. Momentum has stalled, coiled for a break. Two forces collide. The war, which is bullish, and the Fed, which is bearish. The Islamabad ceasefire is dead. Over the weekend, the IRGC declared Hormuz closed and struck the GFS Galaxy. Iran hit U.S. bases in Kuwait and Bahrain. Oil surged 6%. Monday carries gap-up risk. Meanwhile, the Fed flipped its dot plot to a hike at 3.8%, with the 10-year yield at 4.58%. The decisive event, Tuesday's June CPI. What changed over the weekend? 6 key developments. Hormuz declared closed after the IRGC struck GFS Galaxy, with one crew member missing, creating gap-up risk. The Fed dot plot flipped to a hike with median end 2026 rate at 3.8%. Gold stabilized around 4,100, down 1.5% on the week, coiling not breaking. Oil surged 6% with WTI at 74.93, an inflation wildcard. PBOC added 14.93 tons in June, the 20th straight month. And CPI week arrives Tuesday with forecast around 3.9% year-over-year. The geopolitical risk. The June 17th Islamabad ceasefire is dead. Over the July 11th to 12th weekend, the IRGC declared the Strait of Hormuz closed and struck the Cyprus-flagged container ship GFS Galaxy. One crew member missing. Oil surged 6%. President Trump declared the memorandum over. U.S. forces carried out retaliatory strikes on Iranian military targets. Iran then retaliated with missile and drone attacks on U.S. bases in Kuwait and Bahrain. Three-way escalation is live. Because this unfolded while markets were closed, Monday opens with genuine gap-up risk. Fed, rates, and the dollar. The June FOMC held rates at 3.50 to 3.75%, but the dot plot flipped to a hike, with the median end 2026 rate at 3.8%. Of 18 members, 9 project a hike, 8 unchanged, and 1 a cut. PCE forecast jumped to 3.6%, up from 2.7%. September hike odds are now 60 to 63%, up from 54% a week earlier. And the 10-year yield sits at 4.58%, the mechanical cap on gold rallies. Inflation focus. Everything points at Tuesday's June CPI release. Headline CPI in May was 4.2% year-over-year, the highest since April 2023. Core CPI came in at 2.9%. The June forecast is 3.9% year-over-year, with a modal range of 3.7 to 3.8%. Prediction markets show 72% odds above 3.7% and 32% above 3.8%. Oil at 74.93 adds to the inflation feed. The CPI releases Tuesday at 8:30 a.m. Eastern. A cool print means September hikes get priced out and gold rallies. A hot print means yields extend higher and gold stays pressured. The economic calendar for the week of July 13th to 17th. Monday has no top-tier U.S. data, just war headlines and pre-CPI positioning. Tuesday is the big day, June CPI at 8:30 a.m. Eastern. Wednesday brings PPI and Fed speakers. Thursday has retail sales and jobless claims. Monday is all about positioning for Tuesday's CPI, with gap risk from the Hormuz closure early. Technical trend and structure. Gold sits below the 20-day moving average at roughly 4,130. It's also below the descending March to July trend line that caps rallies. The 50-day SMA at 4,350 is the medium-term ceiling. The 200-day SMA near 4,500 aligns with the 61.8% Fibonacci level, forming major resistance. The July 8th low of 4,074.70 is the first shelf. Loss there reopens 4,000, then 3,950. The week ended down 1.5%, momentum stalled, gold stabilizing, not trending. Momentum. RSI sits below 50, showing a lack of buyer interest. Price trades just below the 20-day SMA at roughly 4,130, technically heavy. The week pattern saw gold slide to 4,074.70, then recover to 4,113, ending down 1.5% on the week. Volatility remains elevated with intraday swings of 60 to 110 points, headline-driven. Momentum leans bearish, but gap risk is the bullish wild card. Key resistance levels overhead. R1 at 4,130 is the 20-day SMA and trend line, the key reclaim target. R2 at 4,150 is the swing and July 8th session high zone. R3 at 4,250 is the 78.6% Fibonacci retracement. R4 at 4,350 is the 50-day SMA, the medium-term structural cap. And R5 at 4,500 to 4,510 is the 61.8% Fibonacci and 200-day SMA, the major overhead cap. Key support levels on the downside. S1 at 4,075 is the July 8th session low at 4,074.70, the first shelf. S2 at 4,000 is the psychological and structural line. S3 at 3,950 is the analyst support zone. S4 at 3,900 is the swing shelf. And S5 at 3,800 is deeper structural support, the last line of defense. Projected ranges for July 13th. The daily range is 4,075 to 4,150, with gap potential to the upside. The near-term band spans 4,000 to 4,250. The week of July 13th to 17th is CPI-driven, with tails at 3,950 on a hot print and 4,250 plus on a cool print combined with war. The bull path gaps above, reclaims 4,130, then pushes to 4,150 and 4,250. The bear path loses 4,075, then 4,000, then 3,950. Scenario A, the bullish case at roughly 40% probability. The trigger is Hormuz closure headlines gap, gold higher on Monday open. The path reclaims 4,130, the 20-day, then 4,150, then 4,250. An extension comes from U.S. casualties or confirmed closure extending the haven bid. The strategy, buy dips that hold 4,075, add on a clean break above 4,130. Scenario B, the primary case at roughly 35% probability. This is consolidation and range trading. The trigger is the war bid and hawkish Fed cap offsetting each other, as they have all week. The path is chopped between 4,075 and 4,150 on headlines and yield drift. The tone is pre-CPI position squaring dominating U.S. afternoon. The strategy, fade the edges, buy at 4,075 if it holds, fade 4,130 to 4,150. Scenario C, the bearish case at roughly 25% probability. The trigger is the 10-year pushing above 4.6% or hot CPI fear building, letting the cap win. A de-escalation overture drains the geopolitical premium. The path loses 4,075, then 4,000, then 3,950. The strategy, sell failed retests below 4,075 targeting 4,000. Structural support from China and central banks. The PBOC buying streak is now 20 months, the longest since 2015. China's gold reserves stand at roughly 2,346 tons, or 75.44 million ounces as of end June. June saw an addition of 14.93 tons, the largest single month since 2023. Year-to-date accumulation is 40 tons, with deliberate dip buying below 4,200. Global central bank demand runs at roughly 1,000 tons per year since 2022, double the prior decade. This is why 4,000 to 4,075 keeps attracting buyers. The bottom line for July 13th, near-term bias is neutral to bullish, with a weekend war gap-up tail versus hawkish yields. Gold is hostage to Tuesday's CPI. The key zone is 4,000 to 4,075. Hold, and the range stays intact. Lose it, and we head to 3,950. Bull scenario, gap above, for 1,130, then 4,150, then 4,250. Bear scenario, lose 4,075, then 4,000, then 3,950. The swing factors are Hormuz headlines, the 10-year versus 4.6%, and CPI on Tuesday. Here's the visual resistance map. Green zones mark support at 4,075 for 1,000 and 3,950. Red zones mark resistance at 4,130 for 1,250 and 4,500. Current price sits in the neutral zone between 4,100 and 4,113. That's your daily gold outlook for July 13th, 2026. For educational and informational purposes only, not investment advice. Like, subscribe, and turn on alerts so you never miss an update. Thanks for watching AS Gold.